Hi there, welcome to the Global View. To get your day started before trade resumes here in Australia, we'll take a look around the world today, putting a focus on India and opportunities there. But first, let's get you across what happened on Wall Street. So the local market is expected to head higher, and that's despite Wall Street heading in the opposite direction, led by a drop in the Nasdaq, with tech shares declining as investors took a defensive position. Bank stocks extended recent losses following some mixed quarterly results, though they have had a pretty strong start to the year overall. Bank of America beat profit estimates on a boost from trading activity. The bank expects first quarter net interest income to rise 7%. The CEO remains bullish on the U.S. economy, pointing to a strong consumer. Meantime, Citigroup's investment banking fees rose 35% to $1.29 billion, with the bank also posting a record M&A performance in 2025. The CEO told employees that the bar is raised and also warned of further headcount reduction. Rounding out the bank's overnight, Wells Fargo missed profit estimates on severance costs. Its $50 billion net interest income forecast for 2026 also missed estimates. Its CEO warned that Trump's plan to cap interest rates on credit cards would cause the banks to pull back on lending. In other reporting season news, Biogen shares fell after flagging a $222 million charge to profit in the fourth quarter, and Intuitive Surgical shares fell after a lower than expected 2026 procedure forecast. Copper miners rose, and that included Rio Tinto and BHP in New York. And we saw energy prices rising as well. Oil majors having a good day, as you can see there on your screen. Also, crypto and blockchain related companies had a good day tracking Bitcoin. Its price hit a 2-month high. So that's Coinbase, Strategy, formerly known as MicroStrategy, Riot Platforms, and Mara Holdings, all looking good. U.S. retail sales increased more than expected in November, driven by motor vehicle sales, sporting goods, hobbies, for example. Sales overall rose by 0.6%. The U.S. current account deficit narrowed sharply in the third quarter, though, as tariffs weighed on imports thanks to the U.S. president's tariffs. In other economic news, a Fed survey pointed to an increase in economic activity in most parts of America, and U.S. existing home sales picked up in December, boosted by lower mortgage rates and slow growth in house prices. Home sales jumped 5.1% last month. Meantime, Federal Reserve Bank of Minneapolis President Neil Kashkari said that he's optimistic about the economic outlook and expects inflation to wane. It's just unclear by how much. And in other Fed speak, Marin said that Trump's deregulation will help lower inflation, justifying rate cuts, while Paulson reiterated that more rate cuts could follow a further moderating in inflation. The yield on the 10-year U.S. Treasury note eased. Japanese yen rebounded from an 18-month low against the dollar, and the Aussie is currently buying 66.8 US. Just a note, in Europe, Germany's finance minister called for a new era of, quote, European patriotism to protect regional economic interests, saying that the transatlantic relationship is breaking down. So we saw copper, as mentioned, hitting that record high earlier in the session. Oil climbed as Iranian supply concerns overshadowed an unexpected build in U.S. stockpiles. All the news, including rates and geopolitics, drove gold and silver to fresh record heights yet again. And on iron ore in China, December steel exports hit a record monthly high, on a rush of shipments in December, with 2026 iron ore imports expected to surpass last year's record high. Well, India. So that has been a real talking point over 2025, with plenty of opportunity being found. So what's in store for 2026? Mugunthan Siva from India Avenue Investment Management joins me now. Mugunthan, nice to see you.
Likewise.
Okay, so set the scene for India from a macro perspective for us.
Well, 2025 essentially was a difficult year from a markets perspective. We've kind of understood that. But macro India advanced in quite a few ways. They cut rates quite aggressively by 125 basis points. They have reduced their GST or consolidated it, particularly the highest rates at 28 coming down to 18. They have improved the marginal tax rate or taxes payable for the lowest income holders, and they've injected liquidity into the system. So the local consumption economy should be a beneficiary going forward. However, what has been talked about greatly is the trade and tariff discussions around the US trade deal. Mm-hmm. So what's happened is prior to that tariff being hiked to 50%, India pushed through lots of goods to the US as much as it could, front-ending. Post that, and even during that period, it's also quietly gone away and started signing free trade deals or bilateral trade deals with other regions. And when you look at its exports, you can see the strategy of diversification playing out. So China, Hong Kong, Europe, Latin America, Middle East, Africa, Australia, New Zealand, export volumes rising. And finally, India has sought to move from purely volumes and low cost up the value chain in its exports. So looking at, for example, in pharmaceuticals, we've talked about many times, focusing on more complex generics and more value-added products rather than purely focusing on cost.
Okay, so that is the lay of the land in terms of the macro. How do you see this tariff situation playing out with the US and obviously the import-export implications?
So the deal was expected to be done last year in December. It's been delayed. There is definitely a moot point, which is the US wants access, broader access to India. India has controversial, I suppose, implications around how that could affect farmers and medium, small enterprises. So they're cautious on that because obviously that's votes as well. Mm-hmm. So that's where the deal has sort of struck a blockade at the moment. There's still talk that they will be able to execute it sometime in the first quarter this year. India has a fiscal year that ends in March. However, I would say hopes have been fading a little bit from the rhetoric that we're seeing from both countries. So essentially, India and the US are big trade partners from an Indian perspective, and India has to now pivot, as we mentioned before, into these other regions to offset some of the potential losses they could see from US trade.
So is it more difficult in this environment to be investing in India?
I think it's a shift of which companies will do well. So typically the growth story and the icing on the cake was exports. We'll talk about the two primary exports to the US, which is generic pharma exempt, IT services not tariffed because it's a service. But I think when you look forward, consumption has to become a bigger talking point because it's local demand driven. One of the key changes that's happened is Indians have been investing in their markets far more. So as foreigners have pulled out, locals have increased their investment. Mm-hmm. And one last thing to remember is Indians households have a huge share of gold, and gold has been rising significantly. So the wealth in India through equities and gold has actually increased more than the GDP of Spain, for example. It's a significant increase. So I think local consumption is where the focus is shifting for most fund managers.
That is really interesting, participation in markets on such a scale in India. So how do you as an investor look to leverage that?
Yeah, so in our portfolios, we've tended to focus on what locals buy rather than what foreigners have been invested in. And that tends to, go further down the curve towards the mid and small caps and more localized businesses, particularly banks, non-bank financial companies lending to the local consumer. We've seen since they cut GST, the purchases of autos, motorbikes accelerate significantly. So anything that's going to play into that local consumption story should be the beneficiary.
So right now, as we embark on 2026, and you said, end of financial year, end of first quarter in India, you haven't made any huge changes in terms of allocation in India?
We have gone from underweight in financials to overweight over the last year, I would say. So we had a view that if corporates are in a pristine position, which in India they are, it's the lowest amount of debt we've seen on balance sheet for this century, then they won't need to borrow. However, now we're seeing the environment more conducive to private capex starting to happen. So we do think now that credit growth will start to pick up, particularly with a more favourable environment, as we said, more reforms continuing to happen. That should accelerate firms' confidence in investing in the local economy.
And so to gain access to sort of smaller companies in India, you really need to, I know usually you do sort of a fact-finding mission to the country. Is that on the cards for 2026?
So we do a tour once a year, which is around February, March, which I'll be going on shortly and spending about a month in India. And also, as part of our process, we tend to partner with local fund managers who really understand the ecosystem for investing in some of these mid and small cap companies, which is essential if you're holding them in your portfolio.
Okay, so if there was something to really change in 2026, what would that be? I mean, I'm ignorant as to the election cycle there this year. I don't know if there's anything sort of on the horizon, but where are the sort of flashpoints that if you're looking to invest in India, as you are already, that you would sort of be really cautious around or, really excited about potentially?
The trade deal. So the trade deal is, probably being factored out of prices today because of the disappointments of the delays. So if the US and India did get back on the negotiating table and finalize that deal, that would be a very strong positive for the Indian market. If that doesn't happen, then essentially markets today are looking for a sign that earnings are going to pick up. From 2020 to 24, India's earnings grew at 20% per annum. What happened in 25 is that earnings started to drop back to low double digit or high single digit, and that's what spooked markets. So if we start to see earnings pick up from the consumption side of the economy, then we'll see foreign investors coming back to India.
All right, Mugunthan, thank you. So that set us up nicely for conversations that we'll have for the remainder of the year. Nice to see you.
Likewise,
have a good day.
indeed. Thank you.
All right, Mugunthan Siva there, joining us from India Avenue Investments. Okay, so we were talking gold there. Gold, I'd say the commodities complex will be responsible if we see this local market going its own way, keeping in mind that we did see U.S. markets have a bit of a wobble for the second session in a row overnight, but we're expecting to see a positive start for the S&P ASX 200 according to SPY Futures. Stay with us. I'll get you through the first hour of the open when we return.